because historically it's been an infamously volatile asset. However, it is very interesting to see that Bitcoin is now less volatile than the fiat currencies it is meant to replace. Take a look at this chart. In blue, you see the JP Morgan Global FX Volatility Index. In white, you see the Bitcoin Volatility Index. And indeed, we've seen it stuck in a trading range for so long. As FX goes haywire, it's almost like opposite world.
There's some interesting stuff out there. So it's really my eyes on the future and what the world is going to look like in 12 to 18 months' time.
Bitcoin continues to hover around $19,000. It's evident that Bitcoin has decoupled from other markets and not heavily pulled by the macroeconomics affecting other securities and assets. Bitcoin has in the past weeks been more stable than the US dollar, as the US dollar continues its controversial rise. This rapid growth of the dollar is getting every other country frustrated. Should investors be worried about the dollar? How does this affect cryptocurrencies? These are some of the questions Raoul Pal would be answering in this video.
There's so many needs for dollars, so much borrowing goes on, that what happens is everybody competitively bids the dollar higher. I need my dollars. And the people who can't fall by the wayside. They can't pay their debts. So everybody's restructuring with the IMF. This is why the United Nations is talking about the strong dollar. It's a problem for countries who are weak borrowers. Also, the other reason, so the Federal Reserve is taking money out, but the US is also running less of a trade deficit. What is a trade deficit? A trade deficit is the US buying foreign goods with US dollars. Those dollars go into the global system. So if they're buying less foreign goods, or they're selling more of their own goods, what you're doing is taking dollars out. So you've got this perfect storm of dollars leaving the system and people needing them. And it creates this horrible dynamic of the dollar going higher over time. It's the dollar milkshake theory, as Brent called it, or the dollar doom loop is the other way that I've called it in the past, or the dollar wrecking ball, which is a terminology that I think I invented back in 2015. So as the dollar goes higher, generally speaking, assets denominated in dollars go lower. And so Bitcoin will go lower over time. Normally that would happen to things like the energy market, but the energy market's being driven by other supply and demand dynamics as well. So that is why it's very difficult for these global assets when it happens, because they tend to be depriced lower. It's a very deflationary force having a strong dollar. And I know we're living in an inflationary world, but we're setting up ourselves back up for a deflationary world by having a very strong dollar. Why is that? Well, look at the world's biggest exporting nations of finished goods. Japan, China, Europe, South Korea, Taiwan, all of their currencies have fallen massively. So they can sell goods cheaper to the US. So that's very good for the US because inflation falls. But difficult for those countries because inflation remains high. Complicated macro world out there.
Balance of trade is used to measure how much a country's exports outweigh its imports. When a country imports more than it exports, it causes a trade deficit that negatively affects the value of the country's currency. The United States has been tightening on its trade deficit this year, and this is one of the factors helping the dollar to shore up. In August, the U.S. trade deficit fell to a 15-month low of just $67.4 billion, in attestation to the growing GDP after several months of low GDP growth in the first quarter of the year. This is the fifth consecutive decline in the U.S. trade deficit, and it coincides with the strengthening of the U.S. dollar, showing the direct relation both have. While this is good for the dollar, it is bad news for the international market that relies heavily on the dollar. Raoul Pal shows a correlation between the dollar strengthening and falling crypto prices. Bitcoin and all cryptocurrencies that are tradable on crypto exchanges are all priced in the dollar. Unfortunately, the dollar is too expensive for people outside the United States. Exchanging their devalued currency to the dollar means they are losing a lot of value. With this foreign exchange being unfavorable, people outside the US would rather sell their Bitcoin than buy, because buying Bitcoin is impossible without exchanging their devalued currency to the dollar. The US dollar ended the third quarter 16.7% higher than it was last year in the same period. It is expected that the high exchange rate of the dollar would hit corporate businesses this year. International trade and earnings are likely to decline, due to international consumers being unable to purchase US products and services. Before we go on with the video, take a second to subscribe and turn on the notification bell now. Lots of exciting updates are coming soon. You don't want to miss any.
What I've looked at is global M2. China's M2 is picking up. The UK has started essentially having to increase liquidity to buy UK government bonds. So we're starting to see the potential turn, but the US is still firmly negative. And until the US cycle turns a bit, we're going to see some stabilization in this monetary cycle. But the probabilistic outcome is we have to live in the next 6 to 12 months forward, because that's where crypto lives. And crypto bottomed in June. And so what it's saying is the rate of change of liquidity is now somewhat improving. It's still negative. So I think crypto gave us the signal that things are changing at the margin, but it's too soon for it to fully drive prices. So I think I was just with an interview with Mark Yusko. He put it really nicely. He goes, crypto winter finished in June 14th and crypto spring started. And spring is muddy, some days cold, some days sunny, some days wet, some days windy. But what follows spring is summer, and we're still in spring. So the market goes up and down, doesn't really do a lot, doesn't feel good for anybody, neither bulls nor bears. And that is the function of the economic cycle starting to turn.
Is there a possibility that the 2021 boom in the crypto market was due to the high volume of liquidity that flooded the economy thanks to the $5.2 trillion COVID-19 stimulus from the US government? Because it seems the crypto market benefited in some ways from the high liquidity and zero interest rates, which not only gave cryptocurrencies a boost, but was instrumental in getting businesses back in operation within a few months of the 2020 recession. Money supply M2 is on a decline. Fed is gradually recouping the money it released into the economy in a bid to cull its deficit incurred in 2020. Increased interest rates caused investors to buy more treasures, thereby putting money back into the hold of the Federal Reserve. Raoul Pal thinks the Fed has to eve up and save the assets market, but right now, bringing inflation down is the Fed's priority.
There's some interesting stuff out there. So it's really my eyes on the future and what the world is going to look like in 12 to 18 months' time, and considering how many people are building things, how many people want to disrupt things, how many people kind of know the sorts of things that we've been talking about endlessly and are doing something about it, I think is going to lead to extraordinary outcomes of which we don't yet know.
No doubt, Web3 and blockchain technology are going to open new possibilities. Time will tell how far-reaching these innovations would be. See you at our next upload. Don't miss it.